Assalamualaikum warahmatullah and good afternoon. We continue about the classified balance sheet in terms of the cash. Now we will look into the other types of assets. Firstly, we'll look into the long-term investments. Okay, long-term investments. Long-term investments are investments in stocks or shares and bonds of other companies. Okay, so our business is running and then we have some extra cash and we invest in other companies in order for us to get dividends at the end of the year. Okay, so here it shows who Incorporated has investments in security, okay, of 90,000 thousands. How much is that? That's 90 million. Okay, Yahoo Incorporated has investments in securities for 90 million. So these are because investment in stocks where we have the intention, we invest in those stocks in order to get dividend for them. So this is long-term investments. We plan to keep the investment for a long time in order for us to get a yearly dividend out of that. Okay, so this is classified under long-term investments. Okay, investments in long-term assets such as land or buildings that is not currently being used in operating activities. If we have land or buildings that we are not using for our activities, that is also considered part of long-term investments. Okay, this also includes long-term notes receivable. Okay, if we have issued a loan to a third party and the loan is a long-term loan, okay, 5-year loan, 10-year loan, then it is called a long-term notes receivable and it is under long-term investments. Okay. Next we have the property, plant and equipment. Okay, property, plant and equipment has long useful lives. Okay, so we are expecting to get benefit from owning those things for a long period of time. And these things, property, plant and equipment, are classified under the assets that are classified under property, plant and equipment are those assets that are used in operation. So if we purchase a building and we put up our office, people work in our organization, they come to the office, so the property is being used for operations, then that will fall under property. But if we purchase a building but we do not use it for operations, it is the building is vacant, and we were thinking that well, probably if we keep the building for 10 years we sell it back, we might have capital gain, then that will not fall under property, plant and equipment, which are the assets that we use for operation, but it will be put in under investment because we invest in the building in order for us to get the capital gain in the future. Okay, so it's a little bit different. Okay, property, plant and equipment refers to those assets, those long-term assets that we use in our operation. And these property equipment has depreciation. Okay, most of them has depreciation, which is allocating the cost of assets to a number of years, because we are getting the benefit of those assets, and with the benefit are used to generate income. Therefore we need to match those assets with the income through depreciation, which is an expense. And each property, plant and equipment will have their own accumulated depreciation, which is the total amount of depreciation expense thus far in the asset's life. So accumulated depreciation will increase every year. Okay, it will accumulate. Okay, like the wording itself, accumulated depreciation. Okay, the more common terminology for property, plant and equipment is called fixed asset. Usually people just call them as fixed assets. Okay, or plant assets. Okay, another word for property, plant and equipment, we may call it as fixed assets. So this is an example of a property, plant and equipment classification inside the balance sheet of Copper, Tire and Rubber Company. They have property, plant and equipment. They have four accounts for property, plant and equipment, land and land improvements. They have buildings, they have machinery and equipment, and they have molds, cores and rings. Molds, I believe molds are used to produce tires. Molds, cores and rings. All right. So, and they have all the accumulated depreciation for all of these accounts, and the total property, plant and equipment for Copper Tire is 991,000. And the fourth type of asset is intangible assets. Okay, these are long-lived assets that do not have physical substance. They don't have a physical appearance. Okay, you will, if you take accounting course, you will learn more on intangible assets in future courses. Okay, so but we just look at the examples here. So how do a company owns something, has a property without physical substance? Okay, so some of the examples seen here by Time Warner. If you recognize Time Warner, does it ring a bell? Okay, so Warner, I believe Time Warner is they produce movies. Okay, so their intangible assets include goodwill, film library, customer lists, cable television franchises, sports franchises, brands. Okay, so brand. Can you see the physical substance of a brand? A brand name, where is a brand name something physical in nature? No, it's a concept, it's an understanding. But it has value. Okay, when you have a certain product, two similar product, one you put a brand name to it. Okay, and one without a brand name. When you sell those products, you will definitely see the difference in the amount that you are able to gain from selling those items. Okay, so brand has a significant value, although you don't see a physical 3D substance of it. Okay, so those are examples of intangible assets. Okay. Goodwill. What is meant by goodwill? Well, when a business purchases another business at a price much higher than the value of all the net assets of the company, the difference is called goodwill. Okay, you will learn that in future courses of accounting. Okay.